Hello everyone, welcome to my channel Echo Mystery. Hope everyone is fine and safe. So in the today's class we will discuss about the trading account. What is trading account, how we can prepare that, what is the purpose behind trading account, and what all are the items that we need to disclose in the trading account. So trading account is a statement where we can show all the direct income and direct expenses so that we can arrive the gross profit. Gross profit, it is the profit that we have generated or that we have earned through by selling the goods or by providing the services. So it is just a statement that shows the result of buying and selling of the goods. It means whatever we have earned through our main operation, our main business, that we can show in the trading account, or that financial result we can see through the trading account. So main purpose is whatever we have, whatever the businessman earn through their main business, that we need to disclose in the trading account, or we can see that result through the trading account. So in the trading account we need to disclose what is the opening stock, what is the closing stock, what is the amount of sale we are able to earn, and how much purchases we have, what are all the direct expenses, freight, wages, any carriage involved, and what are all the other direct expenses that we have incurred. And after all these expenses we are able to calculate or able to arrive at the figure of gross profit. Gross profit is nothing else but it is a profit that you have generated through a main business. It means whatever you have generated through a main operation or main operating activity, that is your gross profit. In the gross profit we have never considered the indirect income and indirect expenses. Always we have considered the direct expenses and opening stock and the closing stock. So what is the formula you have to use to calculate the gross profit? Sales, it is your revenue minus cost of goods sold. It means what is your cost to purchase that goods so that you are able to sell further, so that you are able to generate the revenue. And so profit is nothing else, it is your margin. We can say that it is your margin that you have keep while selling the goods. Suppose you have suppose you are a shopkeeper and you sold pens, right? And suppose one pen you are able to sell at 12 rupees, but the purchase price or your cost of goods sold for one pen is 10 rupees. It means 2 rupees here is your gross profit. Okay, so what is gross profit? It is nothing else but whatever the profit you have earned or margin you have earned while selling the goods. So for calculating the gross profit, sales revenue minus cost of goods sold. So the question is how we are able to calculate the cost of goods sold. What is the formula of the cost of goods sold? It is opening inventory plus purchases plus any direct expenses that you have incurred, like any wages of the labor, any carriage inwards, any freight, or any other direct expense. It's depend upon the business, minus closing inventory. It is a cost of goods sold. It means how much you have paid for purchase of the inventory. Okay, so say cost gross profit you have to calculate sale revenue minus cost of goods sold. I'm repeating again, the purpose of preparing the trading account is just to arrive at the gross figure, gross profit, so that a businessman will know how much profit or how much margin they have while selling the goods. Because in the business there are a lot of indirect expenses they have to incur, like any indirect, any telecommunication, any electricity expenses, any salary, or any other expenses like depreciation. Since depreciation is a notional expense where every time we have to record, right? We don't need to pay depreciation from our pocket, but we have to keep it. And tax expenses, so a lot of expenses that a businessman has to pay whenever they are running any business. But their main purpose also to know that how much they have generated the profit from the direct selling of the goods. So for that purpose we have to prepare a trading account, and the formula of calculating the gross profit is revenue or sale minus cost of goods sold. And cost of goods sold you will calculate opening inventory plus purchases plus indirect expenses minus ending inventory. It represent how much you have paid for purchase of the inventory. Okay, let's understand with some examples. Example 1, opening stock is 20,000. It means in the opening you have some stock of 20,000, purchases 1 lakh, direct expenses 10,000, and carriage inward 5,000, sales 1,60,000, and closing stock 30,000. One more thing, so in the trading account we have two sides, like we know that in each account we have two sides, right? On the similar basis, trading account also has two sides, one is debit side, another is credit side. So closing stock and sale will always appear on the credit side, and whatever the expenses we have incurred, it will be appear on the debit side, because there it is all the expenses, and it pertains to the nominal account. And we also learned while posting journal entry, nominal in the nominal account, whatever the expenses we have to debit it, and whatever the income we have to credit it. Okay, so first of all, you have to calculate. Here it is a cost of goods sold. What is the cost of goods sold amount? So how do you calculate it? Opening stock you have to add, purchase amount also you have to add of 1 lakh, direct expenses and carriage inward also you have to add, but closing stock you have to deduct, right? So how much is cost of goods sold amounting to 1,05,000, and how, and this cost of goods sold, how much you are able to sell it at 1,60,000, how much profit you have earned? It means 55,000. Okay, this is the first method where through you are able to calculate the gross profit. And second method is preparing the trading account. So in the credit side you have to put the sales amount and the closing stock, because it is already given in the question. And in the debit side you have to mention the opening stock, purchases, expenses and carriage inward, and the balance figure will be your gross profit. So there are two methods where you can calculate the gross profit. Either you will apply the formula, or either you will prepare the trading account, and through the balancing figure you will able to calculate the gross profit. Either you will apply both the formulas in their quotient to figure out any mistake, or ensure that your answer will be right. Okay, let's try further more examples. Opening stock 50,000, purchases 1,80,000, but there will be some purchase return of 20,000. It means how much is of your net purchases? 1,60,000, wages 25,000, freight inward 12,000, sale 2,60,000, sale return 10,000. How much of your net sale? 2,50,000, closing stock 40,000. So whenever you are calculating the cost of goods sold, you also need to consider the net purchases and net sale return only. Okay, so while calculating the cost of goods sold, opening stock 50,000 we have to add, purchases 1,60,000 we have to add, wages 25,000, freight inward 12,000, and sales 2,50,000. Sales we don't need to consider the cost of goods sold. Okay, and closing stock 40,000 we need to deduct. So our cost of goods sold amounting to 2,07,000. Okay, and how much of our sales net sale is 2,50,000. It means how much gross profit we have at sale minus COGS? 43,000. Okay, and same answer you can derive by preparing the account also, trading account also. Okay, next case study is Sunrise Trader is a small business dealing in household appliances. It means Sunrise Trader is dealing in a household appliances. At the end of the year, the accountant has extracted the following information. The opening stock is 1,20,000. Purchases, net purchases is 4,60,000. Okay, wages 70,000. Freight inward 25,000. Direct expenses 35,000. Sale 7,20,000, and sale return is 40. It means net sale we have to consider while arriving the gross profit 6,80,000. Closing stock 1,50,000. Good destroyed by fire, no insurance claim 30,000. It means some of the goods has been destroyed by the fire, 30,000. So either you will deduct from the purchases, or either you will consider separately in the debit side of the trading accounts. Okay, so net purchases is 4,60,000, and this will also we can deduct 4,30,000. Okay, and net sale is 6,80,000. So firstly, either you can prepare the trading account and balancing figure will be your gross profit. Otherwise we can apply this formulas. First of all, we need to calculate COGS. So it is 5,30,000, because whatever the opening stock, purchases, wages, freight and other direct expense we have to incur, we can add it and deduct the closing stock. At 5,30,000 will be our COGS, and what is sale value? 6,80,000. It means rest is 1,50,000. So I'm repeating again, in the trading account, whatever the direct expenses you have incurred, you have to debit that, and whatever the purchases and opening stock you have, that also you have to debit, and whatever the revenue and closing stock we have, that we have to show in the credit side. And balancing figure will be our gross profit. And another formula is to calculate the gross profit is sale minus COGS. COGS is cost of goods sold, and it will be calculated by opening stock plus purchases net of return minus closing stock plus any direct expenses we have incurred, any if any loss incurred due to fire, or if any purchases, the owner has withdrawn for on consumption, or any other expenses like freight involved, carriage involved, any wages, right? So our main purpose of preparing the trading account is just to know about how much a businessman can earn, has earned from their actual business, from their actual selling of the goods and services, without deducting the indirect business, without deducting the indirect expenses. Okay, hope everyone is able to understand the concept. Try more and more examples, then you are able to have an understanding about the concept more.